Hello, this is Dean Malone with Compass FX. In this video, we're going to talk about trading with the Average Daily Range Pro Calculator. Now, there are different ways you can use the Average Daily Range Pro Calculator. One way is to aim for the daily high and low targets based upon the trending direction of the marketplace, maybe even based upon a chart pattern that you see in the market with a certain bias in the market. Bias simply meaning, are we looking to trade lower based upon lower highs, or are we looking to trade higher based upon higher lows, being an uptrend situation? So once we've determined the potential bias or trend of the market based upon price action or based upon a chart pattern, then we can look for the market to reach a certain average daily range pro target level, whether that be the daily level or the weekly levels. So let's take a look at this. Now, we can see that from the start of the day here, we've seen the Average Daily Range Pro Calculator move up and then move down, and obviously it went down to the daily low target, and currently the market is pressed down to the weekly extension low number 2, and that's where it sits right now. We've had a very strong move down today due to a poor U.S. data report. But if we were to step out before today got started and took a look at the marketplace, we can see that there's a potential for the market to have a head and shoulders pattern. Anytime you see the market move up to a high point, back down, then make a higher high, and then roll back down to approximately the same area, and you can see in this case right here, we're pretty much in that same area, then bounce off of that and make a lower high, that is a potential of a head and shoulders pattern giving you a short bias or a potential downtrend scenario. When you see that, look at your average daily range levels. There's a prospect of the market moving back down to where we started. In this case, we went through a daily low target, and that daily low target, notice, came in very near this pin low scenario that we had before the market made a strong move back up. This was a non-farm payroll situation where the market made a move down based upon the U.S. non-farm payroll employment report and then turned right around and made a strong move back up. However, overall, we have a head and shoulders pattern, and we look for the market to complete lower. And it did do just that today based upon a poor U.S. economic report. Now, that's one way to look at using your Average Daily Range Pro Calculator, is use it as targets to where the market will trade to based upon a chart pattern or the trending direction of the marketplace. Let's look at another example. We're on the Euro Yen. And with the Euro Yen, again, I'm on a 1 hour chart, we can see that the week opened up at a level, then traded down to a level, bounced off of that, and then traded down to the next level. Notice that at the weekly low, the market put in a very strong support. In this case, what we're going to look to do is, as the market trades, if a strong support is put in at a weekly or daily level, look for the market to trade back to a previous weekly level. So in this case, very strong at the weekly low level, and it trades right up to the weekly mid-low level, almost up to the daily high target. Then rolls back over and tests at the weekly low, and when that poor U.S. economic data report came out today, it made a move further down to the next weekly low level, which also is where our daily low target is sitting at, based upon the Average Daily Range Pro Calculator. So again, another way of using the Average Daily Range Pro Calculator is to watch for the market to play levels, be it a support or resistance level. If the market cannot trade off of those levels, look for it to trade to the previous level. Once the market plays back to that previous level and then follows through, in this case, a downward direction, this being a pullback, the market couldn't go any higher, it rolls back over, look for the market to trade from level to level. Now, one other one I want to show you here is, in this case, I want to walk you through the process of using the Average Daily Range Pro Calculator. So this is going to be a bit different. In this case, we've gone back to the start of the day, and I've noticed that we have higher lows coming in, and I drew a trend line. And also I want to note is that it looks like we have a pretty good support level right in this area of 2 lows right there. Tested it, we've been a little bit below it. So right in this area, maybe a little bit higher, we have a decent area of support. We can see up above that we have the weekly open. This is the weekly mid-low. This is the weekly low. And if I move this down a little bit using the right margin, we can see where our weekly mid-high target, the weekly high target is, and so forth, and then our 3 extensions lower. So let's just go through this bar by bar. You can do the same exercise by taking off the auto scroll up above, uncheck that, and then use the F12 key. This is a great technique to really learn the process when using the MetaTrader 4 platform. So at this point, simply click on the chart, and I'm going to press the F12 key, and we're going to go bar by bar, and let's see what takes place using this technique. Now, we would expect that if the market cannot break support like it could in the previous example, that we should see the market press on up and reach to the weekly open level. And that is exactly what the market does. Now at this point, does the market continue to press higher? We do have some resistance levels shown over here with these higher highs. We'll look to see if the market presses up to those levels and then on to the next level. If it cannot break resistance, I'm going to look for the market to fall back, retest the weekly open, and then test the trend line, the sloping trend line that we have. The market presses higher. Let me move this down a little bit and look where the market presses right to in this example. The market presses right up to the weekly mid-high target. This is important to note because this is how to use the average daily range pro calculator. We have an uptrend scenario, and when one level is treated like support, and the support is a little bit below the weekly mid-low, but we went from the weekly mid-low to the weekly open, and now it is tagged the weekly mid-high target. Let's continue and see what happens. The market hits that level, comes off of it, and now it looks like we have a swing high. A swing high would be a situation where you have a high, a higher high, and a lower high. A swing high suggests that the market's going to roll back down. If it does, then I'm going to expect the market to come down and test at the weekly open, to test at this upward trend line, and potentially come on down, test at the weekly mid-low, and then back at this support level. Continuing, we see the market playing that level, cannot seem to break it. Similar to what we had in the previous example, we have a number of bars that have not been able to break high level. The market now trades down back to the weekly open and bounces off the weekly open, treating it like a near-term support. So at this point, we're either going to break through the weekly open and trade lower to test the trend line, or we're going to bounce back up. And this gives ample opportunity to look for what the market does, maybe on a smaller chart. Right now we're on a 1 hour chart, you can see here. You could potentially go down to the 5-minute or 15-minute charts and look for direction based on those smaller time frames. And then look for the market to test back at either level. The market does break the weekly open and continues down, and look what it does. It actually shoots right through the upward sloping trend line and comes right down and tags the weekly mid-low level. The market tests that weekly mid-low level as a support. Then look what the market does. It pins down to that support level that I highlighted back in this area. And that's where we finish off. Notice that the market had gone up, hit our weekly levels, tested another weekly level higher, and then rolled back over and is sitting just about where we started the day. This is an indication of a range-bound market. Oftentimes, even though we're in an upward sloping trend, sometimes the market will range up and down based upon its average daily range. So in this case, we're looking at about a 62 pip move, and we can see from the open of the day, the market moved up just about that level. I can see the highs here coming in about 70, lower highs coming in about 65. Oftentimes when the market moves the average daily range, look for the market to come off of that average daily range. So we moved a full average daily range level up, about 62 pips. The market couldn't press any higher, and then the market fell back over. Not always will the market fall all the way back over, but sometimes the market will fall back over and retest that average daily range distance. One thing of note, I've seen it over and over again, that oftentimes when the market breaks the distance of the average daily range, let's say the average daily range is 100 pips. If the market moves 100 pips and tends to break that average daily range high, then look for the market to go about 20 to 25% beyond that average daily range distance. So in this example, if the average daily range was 100 pips, we look for the market to move up to potentially 120 to 125 pips. Again, this video was to show you how to trade with the average daily range pro calculator. Look for the market to move from levels to levels. Also, look to see if there is a chart pattern that suggests a directional bias. If there's a directional bias, look for the market to trade either to the daily target or one of the weekly levels. Also, consider when trading that one of the levels, be it a daily level or a weekly level, can be used as near-term support, and if support is not broken or resistance is not broken, look for the market to trade back to a previous weekly or daily level. Consider using the technique of going bar by bar, using the F12 key, taking off the auto scroll, and following what the market does. In this case, the market followed the upward trend, moved from a level to another level, treated this level as resistance, then came off of that level, tested back at an average daily range level, then traded lower to a previous level where the market now sits at after testing a previous support. Again, the market has a tendency to move within its average daily range. Remember, if the market breaks the average daily range distance, look for the market to continue moving 20 to 25% of your average daily range distance. Well, this is Dean Malone with Compass FX. I hope some of the information in this video about trading with the average daily range pro calculator will help you in your trading. Make it a great day. Get some good trades.